I'm Neil Vora. I'm the founder and managing partner of Indo-Pacific Ventures. A little bit of brief background about me. I've been an investment professional for almost 16 years now. I've been a banker. I've been an investment banker. I've been a venture capitalist and a fund manager. Based on my diverse experience, I would have invested in a 15 days old startup and as late as a 150-year-old conglomerate. Based on my past career experiences, one of the true story that I would like to share with all of you is a few years back when I was evaluating a startup for investments in India. It was a very early stage startup. Nobody, no VC in India would have given them more than a $2 million of valuation. Now, that founder was Matt, and he came from a very wealthy family. And they were very well connected in the US ecosystem. So what he did was he came to the US shores, he repositioned himself as a US business, and eventually managed to raise capital from one of the most marquee VCs in Silicon Valley. Now, imagine $2 million of valuation in India. Just take a guess of what would be the valuation that he would have raised in the US market. 36 million. So now that's a huge, huge arbitrage, right? So that got me thinking that how can I turn this situation into a commercial opportunity and also create a societal impact for founders who do not come from such privileged backgrounds or do not have strong networks at high level in the US. So that's how I bounced upon of a need to create a bridge between the fastest and the largest market in the world. This is how I went about and how someone who is based out of Silicon Valley could have helped founders in emerging markets like India or in Asia. Imagine if I would have invested at a $2 million valuation back in India in this company, and I would have helped them with the go-to-market connects in the US, help them come over here to the US shores, help them with their legal support, recruitment support, commercial support, enterprise sales, distribution channel partners, everything, like almost becoming a one-stop shop for the founders in the US, and then also help them raise capital over here at $36 million valuation. Now, that's a cool 18 times profit on my investments or scale and valuation. So that's the bridge about. It's a one-stop shop for founders to enter the US market and also scoring a huge valuation arbitrage for the founders. Along with it, you also create a great societal impact for founders who would have created great, amazing products, but do not have the wherewithal to come over here. What it also does, it solves the biggest problem in the global VC and the startup industry. 9 out of 8 startups in any VC's portfolio would be loss-making. I mean, that's just unbelievable number. And it's very unlikely that all these startups are also going to become profitable. So with this model, we can also solve the problem of profitability. I mean, you would ask, how so? One way is if you are making a product in an emerging market at, let's say, 100 rupees, which is like $1.2, and selling over in the US market at $100. So that's a cool, huge, high margin business. It's a no-brainer that it's going to be a profitable model. So, I mean, just to give you a case and example, India's moon mission, which recently they were successful, it was done at the same budget at an interstellar movie. And it was done at just 1/9 of the cost of NASA's moon mission, the lunar mission. So that's the difference in the price arbitrage that we are seeing today. This model is not something, an unproven model as well. A lot of traditional industries have already mastered this product. For example, textiles. Electronics, you look at Apple, they make it in China, they can make it in Vietnam, they can make it in India now. You look at automotive, you look at Toyota, Honda. So this is a proven model in the traditional industries and can also be replicated in the technology industry. To quote a few examples, in technology industry, in the enterprise SaaS businesses, this has already proven to be successful to a large extent. Companies like Zoho, Freshworks, HighRadius, these are one of the most profitable unicorns that are cross-border businesses and cross-border startups. So it essentially is a profitable model and a proven one. What you're also doing is you're betting on the fastest growing economy and the largest economy, the US. And that's a combination to which not many people can match. In fact, it also diversifies your business risk between two dynamic economies. And India not being a pushover, it's soon going to be the third largest economy in the world after US and China. I mean, think of it as you can go back in time in the early 1990s and invest in the miraculous growth of the Chinese economy. The visionaries who did that are multi-billionaires today. So almost every global institution has now hailed India as the next juggernaut who, if you look at every indicator, it is almost at the similar stage what China was in 1990s, what India is today. Be it the demographics in terms of population, be it population growth, or it be in terms of economic growth. Goldman Sachs has predicted that the Indian economy is going to have a multi-decade growth like China. So these are some of the strongest points in the cross-border corridor that we have. Of course, let's not discount the top-notch engineering and management talent that is leading the Silicon Valley. You have the CEOs of the largest Silicon Valley companies like Google and others, which are from Silicon Valley. So I would rest my case over here, and thank you all for listening. Thank you.